All right. Well, happy Thursday, everyone. Thanks for jumping on and taking some time out of your Thursday evening to chat a little bit about the home buying process. I know 2024, the new year, sparks a lot of new goals and a lot of ambition, especially toward financial goals. So we're excited to present to you guys today a little bit about the home buying process, what the process looks like, what the loan process looks like, how you're protected, and how we're going to make sure that we help you achieve home ownership in 2024 or in 2025 if that means you need to maybe repair some credit or get some other um, things ironed out before then. So we always like to start with Leslie introducing herself, and I'll let her open us up here.
Thank you, everyone. Thank you for joining. My name is Leslie Peraza. I'm a realtor here in San Diego. Been a realtor for over 20 years, and we specialize in pretty much representing buyers, sellers, developers, residential properties in San Diego, Orange County, and Riverside. We're also part of a huge networking coaching program here in the United States. So we can pretty much help anyone around the United States. And so that's just a little bit about what we do. And like Luis mentioned, I really like the fact that you're here wanting to learn more about the real estate and how to pretty much purchase real estate here in San Diego. Um, Do you want to go to the next slide there? So who are we? And like I mentioned, we're realtors here in San Diego, and why we've been in the real estate industry over 24 years combined with Luis, and we're recognized in the top 1% in San Diego. So we take pride in that. We're not just any realtor. We're here to represent you to the best of our ability, and more than anything, to teach you how to become a homeowner. We're also part of what we do is we're part of a team of a lot of marketers, assistants. We have operations and analysts, and we work with a lot of affiliates. And I think it's important to know that we have a team behind us, and more than anything, we're here to guide you every step of the way. Here at Peraza Real Estate, we pretty much have a motto. We say it's not about real estate, it's about changing people's lives. And that's what we do. We are passionate about real estate. We're here to help first-time buyers buy their first home. We're here to help people that have already purchased a home pretty much build generational wealth. We also help people invest in more real estate and teach them how to become investors. So we're well-rounded, and we take pride in that. So a couple of things: the importance of home ownership. Like we always state, we want to have stability when it comes to home ownership. And that's why we promote owning your own home, because number one, stability. You want to know that you're in control of your asset, of your home, because if you're a current renter and you've been renting for a year, 5 years, 20 years, even though you have a written lease and you might think that you're okay for 12 months, any owner can pretty much give you a 60-day notice to vacate because they have to sell the property for X, Y, and Z reason. So nothing like owning your own asset, your own property to call home. Even if it's a small little 1-bedroom, 1-bath condo, you're in control of what you're paying a month. You're in control of owning that asset, because again, every year, basically the landlord can raise your rent. And so at least owning a home, you'll know your payment for the next 30 years. And so, the interest rate will stay fixed for 30 years. And Selena, our lender, will talk a little bit about that. And so you're not stressed, basically thinking that your rent's going to go up or your mortgage is going to go up. So the stability is very important when you own a home. Another benefit is financial benefit. Like I mentioned, it's an asset. Nothing like owning something that's yours, because the biggest thing is if you have an asset, it's going to grow over time, the value of it. So we'll be talking a little bit about that here in our presentation. The other thing is now you're also in control of where you want to live. The benefit of community connections, of maybe you want to be in a certain community like North Park, or you want to live in Chula Vista because of the school districts, or you want to live in downtown because you like that lifestyle. There's different reasons of why you own a home in the area that you want to live. And so that's really important as well. And then you can personalize your home. You know, once you own your home, if you want to paint a wall purple, you can paint it and nobody's going to tell you. But when you're a renter, you can do certain things. So again, there's many, many benefits, but these are just a few of you know, the items that I wanted to, you know, express when it comes to the importance of owning a home.
Thank you for that. I think it's important, like you said, to have some pride of ownership and really see your home purchase as an investment. I think one thing we stress to our clients is making sure that they understand if they buy today, hoping that their property goes up 20% in a year, that's not very realistic. But we do assure you that over time, you know, over 7 years, 8 years, 9 years, 10 years, you will be in a very, very good financial position for you and for your family. Currently in the San Diego market and across the nation, I pulled some data from Freddie Mac, which is one of the largest loan servicers or loan providers in the United States. And the good news is that rates are coming down. A lot of people in October, November, and even December were a little bit startled by rates jumping up to 8% at a certain point. We did see 8% coming through from Selena in some of our loan applications and some of our loan approvals and estimates. But the good news is that rates are coming down. So as you can see in this graph, this is data from September 2023 all the way until January 11th, which was about a week ago. And actually a new report will be coming out tomorrow. But you can see the trend there. You can see toward the end of October, we had weekly average rates at 7.79. And since then, we have seen those come down to around 6.5. That's good news. Good news and bad news. The reason that that could be bad news is because since December 1st, up until a couple days ago, we have seen mortgage loan applications jump by 20%. Statistically, December is a slower month for loan applications, but January is usually a big month for loan applications. Even
No,
with
it's not.
even with that data, we did see in January loan applications jump up 10%. So what does this mean? Mortgage loan applications going up by 20% is going to lead to more buyers home shopping, more buyers in the market. And in the next 60 to 90 days, we are going to see a spike in prices and in competition with homes that are for sale and on the market. We have seen already with some of the listings in our office that properties that are priced correctly and prepared correctly are having multiple offers. So we have a property that had 6, 7, 8 offers and went into escrow within a week. So that is a very strong indicator as to what is happening in the market. The other point we like to make, and this goes back to Leslie mentioning a little bit about being a homeowner, right? What does that serve you? How is that powerful in the future? Across the United States, the average homeowner has 300, and that should actually be a dollar sign, has $300,000 in equity. That means that based on what their home value is today and based on what they owe on their mortgage, or maybe they don't even have a mortgage, the average homeowner has $300,000 of equity in their home. This stat I put up here to emphasize that the impending doom that some people have and the fear of the market crashing and home values coming down is not very likely because of this statistic. It's not very likely that people have bought in the last couple of years that weren't qualified, that don't have stable jobs, and that are stretching themselves too thin. And this is a very good indicator that should something happen, there's still enough homeowners in the market that have a lot of equity and that have a very safe position to continue to be homeowners and to keep a market very stable here in the United States. We want to talk about your opportunity as buyers working with our team and Selena and other affiliates that we've worked with. In 2023, and not a lot of agents can attest to this or can pull up these numbers like we can, but we do a very good job of tracking all of our transactions. In 2023, we saved our buyers almost $512,000. So that means they either bought the property under what it was listed for, we got them a credit toward their closing cost, or they purchased the property for less than what the bank said it was worth. So that's a huge win for our buyers. On the selling side, and I'll briefly talk about this, on the selling side, we were still able to achieve a really, really awesome result when it came to people selling their homes. In a market where it was very shaky at times, there wasn't maybe a lot of buyers, not a lot of competition. The media was telling us that people were stuck in their homes. We were still able to get our sellers almost 3% over what we were listing their home for, which is an incredible result. The other powerful piece, which is that last number on the screen, is 10.35%. This is the percentage of equity that people gained in the last 24 months that bought with our team. So whether they bought at the beginning of 2022, ranging all the way up until December 2023, on average, those homeowners gained 10% in equity. If someone bought a $500,000 home, that means their home went up by an average of about 50 grand. It's very difficult for people that are renting to save $50,000 in a year or 2 years. This is an investment opportunity, and this is an investment asset for you to really think about moving forward when it comes to financial wealth and planning your future to be in a better position. The other opportunity that we like to talk about is our network. As your buyer's agent, it's not just sending you listings that are in the MLS or on Redfin or on Zillow. It's really having a face-to-face conversation, sitting down and talking about your goals, sitting down with Selena and looking at what your budget looks like so that we can go out of our way and search for opportunities that are not accessible to anyone else. We have connections with agents in the industry. We have our brokerage of about 50 to 60 individuals that are constantly circulating properties that never hit the market. Today, actually, we have a buyer that's opening escrow on a property that we had known about for about 4 to 5 weeks. And it looks like we will be opening escrow tomorrow morning. So these are just little bits and pieces of the opportunity that really working with a good buyer's agent is going to afford you. And the last thing we want is for you to go and compete with 10 other buyers in March or April when things are going to get tough and things are going to get competitive. The next step is you wanting to buy the home, right? Wanting to buy your house and really wanting to step into real estate. And you're probably wondering what next. We like to break down the home buying process into 4 simple buckets. One is the pre-approval process, which the lender will take care of and Selena will take care of. The next step is the actual home search. And right before that home search, we'll sit down, we'll map out what your criteria is, what your must-haves are, and what maybe some things would be great to have, but based on your budget, might not be completely possible. The third bucket is going to be escrow. So once you get an offer accepted, there's a period of anywhere between 10 to 30 days normally that you will have an inspection period, so to speak, to make sure that that home and your loan is in order so that we can hand over keys on closing day, which is that last bucket. Closing day is our favorite day of the escrow process because that is when you get to get the keys to that new property that you purchased, and all that work pays off. We have an awesome success story from Christian, and he's supposed to be on, but he's having trouble with the Zoom link. But that's okay. I might have him jump on earlier or in a couple minutes. But this is an incredible story because in September of 2023, we had an in-person seminar here in Chula Vista, here in downtown Chula Vista. A couple weeks prior, I had met with Christian for lunch because we have known each other for quite a while. Grabbed lunch with him. He had piqued interest in purchasing a home, but he had mentioned that his fiance, Macy, was a little apprehensive and wasn't sure if it was the right time for them. After that, I encouraged them to jump on our in-person meeting. They came to our event September 28th. A couple days later, they got approved with Selena. I think it was about 2 or 3 weeks later, they got approved with Selena. They knew the numbers. They were still going to hold off, which was completely okay. We knew what they were looking for. And quickly thereafter, we got a message at around 8 p.m. on a Saturday. Oh, I remember very vividly. Received a message from them at 8 p.m. on a Saturday. Sure enough, him and Macy had been searching on Redfin um, at homes, like a lot of us do. And they said, hey, this property came up. Is it possible to see it? 12 hours later or 15 hours later, we were at the property. Leslie was showing the home to them in Chula Vista. A day after that, we submitted an offer. The offer got accepted out of 7 offers. We actually also got them a credit, I believe. I forget exactly how much, but we got them a credit for closing costs. And after that, we handed over keys a couple weeks later. So perfect timing. Christian jumped on just now. I'll let him chat a little bit about his experience with our team, maybe chat a little bit about some things he didn't expect that happened, and some tips and tricks for a first-time buyer that's excited to get into the market here in the next month or so. Christian, go for it.
Hey everyone, so my name's Christian. As Luis mentioned, me and my fiance were first time home buyers and didn't expect any of this to happen so fast. I first met them at they held like a seminar. We were very scared just because, it's a daunting process. We both didn't know much about it, and everything you see about the market just kind of, I feel like that makes people scared to even take that first step. So that's kind of where we were at. But when we attended the seminar and just became more knowledgeable about the home buying process and how everything worked, and saw how professional Selena, their team, Luis, Leslie, how professional they all were, it really made us like, oh, this is something that we might be able to do. And like Luis mentioned, we were able to do it, but obviously wouldn't have happened without their help and their guidance along the way. But yeah, it was a scary process. It was a fast process, but my advice would just be to get your foot in the door, ask questions, take that first step. I know that's the hardest part, but every once you take that first step and see that this is something that can be attainable, it made us feel a lot more comfortable. And at the end of the day, now I just came back from we were doing some remodels on our place, so that's where I came from. So sorry I was a little late, but uh, know that everything can happen so fast, and we're both young, and it is a scary market. You see the interest rates and all that stuff, but Luis, Leslie, and Selena and all their teams, we were definitely in the right hands, and they gave us all the information that we needed to be successful in everything, and made sure everything was smooth sailing.
Thank you. Thank you. Thank you. Any questions anyone has for Christian while we have him here? I know I threw up some photos of you guys tearing out the carpet at Fourth Avenue so people can see that you guys got to hard work there pretty quickly.
Yeah.
But any questions that people have for Christian? And we're happy to pass along his contact info if you guys want to reach out to him directly as well. No questions? All right. Christian, I guess you're off the hook. That was That was quick and easy. But here they are again. This is Christian and Macy. They bought their first home together in 2023, and we're excited to help them again in the near future. We can't wait to see the finished product.
Yeah, it's a work in progress, but we're working on it. Hopefully, in like a month or so, it'll be all finished.
That's awesome.
But yeah,
Thank you, Christian.
yeah.
Up next, we are going to have Selena Tomina, who's our preferred lender. She is here local. She has her office in Eastlake. She's worked in the real estate in the lending industry for how many years, Selena?
Well, like 18 years now.
Okay. 18 years, so a wealth of knowledge and a lot of experience. She does work with her husband Omar, who has a lot of years under his belt as well. And so I'll let her dive in and introduce herself.
Hello, everyone. My name is Selena Tomena. Thank you, Luis, for that nice introduction. Um, I have been in the mortgage industry for 18 years. I started as a loan processor, moved to New York, worked with a boiler room style office where we were doing loans nationwide. And I came back to San Diego. We opened up a brokerage. And when the market crashed, that's when I became a loan officer. So I've been through several different markets and just seeing and working through the different mortgage environments, should we say. And so I'm excited about this year because I think it's looking healthy. And I think that there's a lot of great opportunity for our clients to become homeowners. It's never too late. You can never miss a market. So I'm really excited about this year. Okay, so we'll go into the different loan types. The first loan type we're going to talk about is a VA loan. A VA loan is for veterans or active duty members or even reserve. Um, there is a zero down payment on a VA loan. There is a funding fee if you are active duty or you do not have 10% or more disability. That is all rolled into the loan and part of the closing costs. So you can come in with a zero down. The only thing that you would come out of pocket would be appraisal, any type of inspections, and closing costs. VA loans are by far the best loan on the market if you have the ability to get them. They are for owner-occupied buyers only, and oftentimes they have the lowest rates available. So it is a great loan. You can use your VA loan over and over again. It doesn't mean that every time you use it, you're going to be able to buy with 0% down. We do have to work with the factors that VA puts in place for us, but that's all done in-house. We work directly with VA. We don't have any, should we say, overlays. Overlays are additional rules that are put in place that VA does not have, but certain banks do have. So that's talking about VA loans. Next, we'll go into FHA. With FHA, the minimum down payment is 3.5% down. This is for owner-occupied buyers as well. You can use your FHA loan over and over and over again, but you cannot have more than one FHA loan at the same time unless the properties are over 100 miles apart. Okay. FHA does have monthly mortgage insurance, and that is for the life of the loan. So oftentimes clients do refinance out of FHA loans once they've established enough equity in their home to eliminate that mortgage insurance. But FHA, like VA, is a government loan with very low rates. There is a fixed monthly mortgage insurance, so it doesn't matter if you have good credit or bad credit, it's the same for everyone, which is a benefit that FHA has. Now, when you're purchasing a condo, the property does have to be FHA approved. If you're purchasing a house or multifamily, like 2-unit, 3-unit, 4-unit, The properties do not have to be FHA approved. They just have to meet all health and safety regulations. So anything that doesn't fall under health and safety guideline, then it just has to be repaired prior to closing. Next is conventional. So oftentimes clients think that they have to come in with 20% down for a conventional loan. That is not true. As a first-time homebuyer, you can come in with as little as 3% down. If you're not a first-time homebuyer, the minimum down payment is 5% down. So you can come in with anywhere between 5 and as much as you want in down payment. 10, 20, 30, 40, 50% down. It doesn't matter. Anything under 20% down payment does require mortgage insurance. Mortgage insurance is added to the monthly payment with FHA and conventional. The difference with conventional is that once you have acquired that 20% equity, or you pay down your loan balance to have that sufficient amount of equity in your home, so not necessarily does your value have to increase, you can pay it down and the mortgage insurance will fall off. All you do is contact your servicer and they reassess the value of the home and they remove the mortgage insurance. You do not have to refinance out of the loan, which is a benefit. The difference between FHA and conventional in terms of mortgage insurance is that the mortgage insurance on a conventional loan depends on your FICO score, the down payment, the property type, and the loan to value, even debt to income ratios. Whereas FHA, it's the same no matter what those terms are. So that's kind of the difference between the two. With a conventional loan, if you're purchasing a condo, the property does not have to be on an approval list, but it has to get approved, meaning it has to meet all of the guidelines that conventional financing has for a healthy HOA. With FHA, the complex or the HOA would do that in advance to get approved. With conventional, we do it as part of the loan. Oh, down payment assistance. So there are some great down payment assistance programs right now. You can do state, city, and county assistance. The city and county assistance right now are offering 17% down, and you can get a grant for closing costs depending on your loan criteria, basically your file, if you would qualify for it. So for the city, it's only in zip codes 921, San Diego City. If it's a county, there's a list of certain cities within the county that are approved. Unfortunately, Chula Vista is not part of that approval, but Chula Vista has its own program. Then you have state funding, which the state funding has more lenient guidelines in terms of income, because all of these programs have income regulations in terms of like who can qualify based off their income. Your state program is going to be a little bit more lenient in terms of income and purchase price. That program is going to offer you 3% down towards your closing costs and 2 or 3% depending on your FICO score towards your towards your down payment, and then the one is towards your closing costs. So with down payment assistance, it is very important that your loan officer, me, I have all of the information up front, and that we do our due diligence. So the pre-approval process might take a little bit longer because the guidelines are not bank-to-bank guidelines. These are state, city guidelines that are fixed within the program. And for example, an underwriter with my bank will calculate income in one way. But the underwriter for the city might calculate your income completely different from the underwriter of the state. So it's really important that we know these guidelines. We're constantly getting updated, taking our annual courses with these programs so that we know exactly if you would qualify or not. Like, who is the right buyer for this program? Because they are very detailed programs and they require us to be patient and diligent with all of the documentation that is required.
Now, I know up here I don't have a slide that talks about what's called non-QM loans, but Selena, talk to us a little bit about what that means and maybe one or two popular loans that entails.
Yes, of course. So non-QM loans are basically loans that are not backed by Fannie Mae or Freddie Mac or HUD VA. So earlier, Louise talked about Freddie Mac. So Freddie Mac and Fannie Mae, they kind of, what they do is they regulate the, the mortgage industry and the rules, regulations, guidelines across the board. Okay, so when you close on a mortgage, your loan gets serviced. That means it can get sold to different banks. And that's how basically big banks make their money is they sell their loans out in bulk. Now, these loans all meet Fannie Mae, Freddie Mac, FHA, regulations. So sometimes there are certain types of loan scenarios that we get that don't meet those regulations. So it doesn't mean that there's not options available. One option that we have is a bank statement loan. Say, for example, you are self-employed and you write off all of your income and expenses. That is very common. We see it often. So what then we do is we say, okay, let me see 12 months worth of bank statements. That calculation is done based off deposits in business bank statements, and there's also deposits in personal. We can only use one or the other. So you have a bank statement loan where we're able to calculate your income. There's also what is called a P&L loan, basically a profit and loss of your business for the last 24 months or 12 months, and that comes from your CPA. There's also a for national program. We have an investment program that is called DSCR, where I do not need any income to qualify because the qualification is based off of the rents that the property will receive, and that's how that is qualified. So there's so many different options. If you feel that maybe, you're not claiming enough on your taxes or, you know, your credit might not be where it needs to be, uh, please talk to me because there's so many different options that we can look at and we really don't know what the best fit is until we're able to really analyze your application and your credit profile. Then at that point I can guide you to the right program for you. And then once you have those options, you're able to set a game plan in terms of what down payment is required, how much closing costs, is this is this loan gonna have, and what is my exit strategy if I do a non-QM loan to get into a conventional loan? We want to set up a plan for you to one, get into the home, and then after you're in the home, at what point can we help you refinance or save money after the fact?
And Selena, you made a good point saying that every situation is different, right? Every client is different. Every buyer scenario is different, and it can even vary from property to property with the same buyer. So it's important to have those options and to really explore every single avenue, and having an exit strategy is really important as well, especially when you're in a loan that's not traditional and fixed for 30 years.
Absolutely. So, as we stated earlier, we have seen a lot of volatility in rates, and even just this past October, November, we saw rates creeping as high as 9% depending on credit. The Feds did announce that they were no longer going to have doing more rate hikes. But it is very clear. I want to be clear that the Federal Reserve and mortgage rates aren't always in alignment. And the reason being is that mortgage rates are based off the bond market. And the bond market kind of is reflective of what is going on really in our economically in our world, but not just that, inflation. There's so many things that are like taken into account because these rates are for 15, 20, 30 years. So if you're gonna let you tie up money for that amount of time and it's fixed without any penalties on that money, they are looking at where are we in our economic state, but where are we also globally? So any little factor is kind of, there's still some volatility, but we have seen these rates come down between 6.375, 6.5. If you're looking at a government loan, the rates are in the higher fives, 5.75, 5.625, maybe even 5.99, depending on credit. So the predictions are is that rates are going to continue to come down throughout the year. We are in election year, so that is why they're stating that rates will continue to, come down. It's just closely monitoring the market. I am very in tune with the market. I study it daily. We get lock alerts. We get alerts, if we need to float the loan, like maybe float the rate, like maybe not lock it up in this moment, but just keep monitoring it. Or, you know what? The jobs report is going to come out, lock your loans now because it doesn't look good. So we're constantly in tune with the market so that we know how to best serve you. Okay. So what do you need to get pre-approved? Let's start with your ID, 2 most recent pay stubs, 2 most recent bank statements, your last 2 W-2s or 1099s if you're self-employed, last 2 years tax returns. So right now we're kind of going into tax season where it would be 2022 and 2021 because 2023 are not filed yet. And then if you're a veteran, we would need like your DD 214 and other documents that VA requires. So this is where we look at, if you were to see this list and say, you know what, I don't have taxes because I haven't done them, or I don't have a 1099 or a W-2 because I'm self-employed and I don't get paid in that manner. So that's when you and I would connect and say, okay, what do you have? Or I need alternate documentation. So it's just loans are very fluid in terms of the circumstances of each client. Okay.
Thank you for that. And back to our where we started, which Selena talked a little bit about the pre-approval process. Once you meet with Selena, like I mentioned before, we sit down and really have a game plan. We talk to you about where you want to live, what are the must-haves, how many bedrooms would you wish to have, how many bathrooms, do you prefer a parking garage or are you okay with a parking spot? Things like that, right? Do you need to be close to a freeway? Do you need to be in a certain school district? Because once we narrow that down, it's our job to take you out to properties that are on the market and opportunities that are off market to go and really take you through that buying process. It's not very often that when we sit with a client for the first time and they tell us they want X, Y, and Z, they end up getting necessarily X, Y, and Z. That's not a good thing or a bad thing. That's just the reality of the buying process. Because you might say, I really need to be in this neighborhood because I want my kids to go to this school. And we might see a couple properties in that neighborhood, and you might drive around there at a certain time of the day, and you change your mind, and that's okay. And that's part of the buying process. And so that's our job, is to hold your hand and help you answer the questions and answer the concerns that you have along the way. The next thing I want to jump in and talk to you about is our obligation as your realtor. As your buyer's agent, now more than ever, and especially as competition is going to start to get more and more dense, it's important to know that your buyer's agent is there to protect you. Our duties are to you as a buyer to, again, make sure that you know everything you're signing, you know what you're buying, you know your timelines, and you know that for the next 30 years, you're obligated to pay X, Y, and Z dollar amount for your mortgage. You've got property taxes to pay, you've got insurance to pay, you've got property taxes, like I mentioned, and all of that. There's a lot of nuances that as a buyer, even if you've done it 10 or 15 times, things come up and new things come up in every single transaction. I went through what's called our residential purchase agreement earlier today, and I did count 51 line items that we, as your buyer's agent, negotiate on your behalf. This can range anything between your purchase price, your loan type, how long escrow is going to be, whether or not the refrigerator is staying. Everything in between is negotiable. And it's important to have an agent who knows contracts well enough to be able to have your best interest and to really fight for you when it comes down to it. The next thing I want to talk about, and this is a list that I grabbed from someone that I recently spoke to, which is 89 ways that we serve you. 89 check marks that we have to go through from beginning to end. And I would argue there's probably 189 ways, but there's a lot of different points in the transaction that we are going to guide you, and we're going to answer questions, and we're going to educate you ahead of time to make sure you know what's coming, why it's coming, and how we can protect you in every single facet of it. Again, you look at number one, and it starts with scheduling a time to meet to really strategize on what you're wanting to purchase. We jump down to the second column and you look at number 10, for example, and it's, guiding you through what an offer looks like, right? What does preparing an offer entail? You jump to the third column and you look at number 21, and we got to guide you through reviewing your closing documents. This jargon on here is all to say that there's a lot of steps that you probably don't know of, that along the way, we're going to make sure you're protected and that you know every single detail that's involved. Okay, we're here to protect you and to serve you. With that said, you are protected with a couple different points in the transaction. And I won't get too into detail with this because this can get really technical, but just as an overview, there's three very important contingencies, they're called, that are going to protect you along the way. Those contingencies are anywhere between 5 to 15 days at the beginning of the transaction to protect your deposit on the purchase, okay? Once you get an offer accepted, you have 3 days to submit a deposit, which gives the seller a good faith agreement that you're going to be contractually obligated to close the transaction. That deposit is still protected with inspections, which can range from a general home inspection to a roof inspection. There might be a pool, so you want a pool inspector to go out there to make sure all the pumps and the structure of the pool are intact. Anything involved with details about the home. It also includes details about permits or details about where your property line is. You have the opportunity and you have the right as a buyer to do as much research as you'd like up into a certain day. The next one is the appraisal. An appraisal is a third party that the bank sends to go and make sure that the home is in safe condition and that it is worth what the contract agreed upon states. If the bank thinks that the property is not worth what you're purchasing it for, They're going to provide you that report, and it's going to be our job to go and renegotiate with that seller to reduce that purchase price or to somehow come to an agreement on that value that was given by the appraiser. The third protection is going to be your loan. At different points in the transaction, Selena is going to be verifying employment. She's going to be getting updated pay stubs. There's going to be a third party on her back end that's going to be looking at your taxes. Maybe if there's rental income on one of your properties, they're going to be reviewing all of that. If at some point the lender doesn't see eye to eye with what you've submitted, you might not be able to get a loan, and you're still protected and your deposit is still protected by that contingency. Okay. It's very important also that when you're in the buying process, you don't open new credit cards, you don't close any credit cards, you don't make any large purchases, because all of that can affect your credit score and it can affect your debt to income ratio when it comes to qualifying for a mortgage loan. When it comes to purchasing a home, it's important to understand the selling side of things. The selling side, there's a selling agent that meets with the seller and they come to an agreement on when the home is going to go on the market, how much it's going to be listed for sale, and what that seller is going to pay that agent to sell it and to basically transact that from beginning to end. So that's what's called a residential listing agreement, okay? An important part of the residential listing agreement is that commission part of it. That seller and that agent negotiate at the table when they meet, either for the first time or maybe it's taken a while for them to come to an agreement to discuss how much the seller is willing to pay in commission, okay? There's no normal amount, but generally speaking, a seller is willing to pay anywhere between 5 to 7% of the sales price, okay? Traditionally, that seller is paying the listing agent a commission, and that listing agent is going to share that commission with someone who represents the buyer, which would be us, okay? In the event that the selling agent is not willing to share that commission with us, it's important for our buyers to understand that we work for a commission. We work to be compensated. Traditionally, the selling agent will pay us 2.5% to 3% of the purchase price. If that isn't negotiated and if the selling agent is not willing to share that with us, then we're going to have a conversation for you to bridge that gap and to pay for that service of us going and finding you the property, negotiating on your behalf, going through that list of 89 things and so many more that go into that transaction, and making sure that you're protected. So that's something we always like to talk about, because after this and after you meet with Selena, the next step would be to have this agreement signed and start our home process, because we want to sit down, know what your buying criteria is, and start making the phone calls, start door knocking, start reaching out to our sphere to find you an opportunity that you're not going to want to let go of. So that's something that, again, after our conversation today, we would talk about. Again, 98% of the time, the selling agent does pay us that commission, but in the event that they don't, or they only pay us part of it, there is going to be an obligation on your end to fulfill that remaining percentage of what we charge.
My name's Melissa.
I'll pause that real quick. We like to end this, and we'll have a Q&A session real quick, but we like to end this with 3 heartfelt testimonials. One of these is from a first-time buyer that is in her young 20s that purchased her first condo in Bonita all by herself. The second video is a client in her late 60s who bought a secondary home here in San Diego with her and her husband. They actually live up in I think, LA County or Orange County. And the third video is of a married couple with a son who's in middle school who wanted to sell their home in Normal Heights and go and purchase into a different neighborhood in Del Cerro for the sake of sending their child to a better school. So I'll let these play, and then we'll open it up to Q&A.
First time home buyers. First thing I was surprised at when I first met with the Peraza team is how they made the possibility of buying my own home a reality. I thought that I would buy my first home until I was way older, but they honestly broke it down what the possibilities were with my job and what I had currently saved. And even if I wanted or to look at other properties, they told me the goals and what I had to do to get to that point. My advice to anyone looking to buy a first home is to keep an your job or who you are. I think the home buying process is possible for anyone. If you're looking to buy or sell, I highly recommend the Peraza team.
My name is Laura, this is Simon, and we just bought our second home. That life is comfortable enough so you can afford a second home. This house, literally, I saw it on the internet. I call her up. She contacted the agent. We literally get it within 2 weeks, which was unheard of 30 years ago. So when you ask any questions, doesn't matter how stupid it might sound to me, but for them, it was a question needed to be answered, and it was answered in a very organized fashion. And that was a big deal for me because I have to understand what I'm signing. People don't work after work hours. She did. And that's the beauty of it. Always on time, always go and get them. So it cut my time, which time is precious. And here we are. Within 15 days, we close the escrow. If you're looking to buy the house, I would absolutely recommend Peraza team. Go, Leslie.
My name is Tony.
My name's Claire. As parents, Tony and I are really dedicated to our son's education. We had been thinking, hey, it might be worthwhile to get closer to his school and his community and really put down roots and be there. So that kind of jump-started our journey, and that's why we decided to move. When Tony and I had talked about selling our house, we know a lot of realtors and we had a lot of choices, and we were looking for kind of the right fit in terms of expertise and personality. We really just kept coming back to the Perazas time and time again as having that blend of both heart and ability to sell a very unique high value property.
It's such helpful that they showed us what we needed to do to the house to get it to the condition where we could sell it for as high as.
She contacted the agent.
I'm not sure why that's playing that way, but you get the point. We will now open it up to Q&A. And if anyone has any burning questions, we're happy to answer them right now. Don't be shy, or maybe Selena or Leslie want to add a comment or maybe a myth that's going around in the market. And if not, we'll wrap this up.
I think the biggest thing that I want to add is obviously purchasing a home is a big investment. And I think the hardest part is just deciding that you want to purchase, because once you decide you want to become a homeowner, is finding the individuals to guide you through the process. So yeah, I mean, I think it's definitely something that you need to explore your options. You need to find out more about, like we just talked about, the process of where you're at with your finances, with your credit. Let's talk about it. And based on that information, it might take you a month to be ready, or it might take you a couple of years to save enough to purchase. But it's never too early, it's never too late to get started.
Selena, do you have anything to add?
So I know last year we had a lot of clients that were just kind of struggling with inventory and finding finding a property, not with your team, but just in general with buyers. And so with your ability to, in our experience and your ability to find the right properties, maybe talk about how you work to get those properties, because I do have other agents who struggle to find properties. Their clients end up giving up because they say there's no properties on the market, but our buyers never have those issues. So there's something that you're doing that is so unique to what other agents aren't doing, that our buyers are opening escrow and they're in love with their home. What is it that you guys are doing to help your clients with that? Because it's truly, since I work with several agents, it's something that is special about your team and how you provide that service to our buyers.
I know that it starts with that initial conversation. It starts with asking the right questions. It starts with digging a little bit deeper behind what the motivation is and why they're moving or why they want to move. From there stems the wants, right? I want 3 bedrooms, 2 baths in Chula Vista in a cul-de-sac, and I want it to be remodeled. And so that conversation really starts the exploratory phase of us now knowing, okay, John and Jane are looking for X, Y, and Z. I need to keep an ear out. And more importantly, I need to start reaching out to agents in my network, and I need to start talking to people in my network that I know work with that type of seller. And so we've done a really good job of connecting with agents in certain neighborhoods, connecting with investors that are flipping properties. I think that's a market, that's an untapped market that agents fail to realize, that if an investor is buying a distressed home, that home is going back on the market in a month, 2 months, or 3 months. So if that home you know is going to be remodeled and you know it checks all the boxes of the buyer, why not contact that new owner, that investor, and have the conversation about, explaining to them that you have a buyer that you think fits the bill. And if you can create that relationship off market, whether it's with an investor or whether it's with maybe one of our past clients that owns a property with that description, if you can start that conversation, that is the matchmaking that goes on behind it. Because we know that once the home gets to the market, we don't know how long that agent's been talking to their partners and their clients and their network to try to sell it. So just like other agents try to sell their homes off market, we try to do the same with our sellers. And at the same time, we know that as a buyer's agent, we have to facilitate those opportunities for the client. Part of that does sometimes involve mailing to certain neighborhoods. Part of that involves door knocking certain neighborhoods. And again, there's certain clients that as home searches progress, they know that they want to be in a specific complex, right? Or they know that they want to be in a specific 3-street radius. And so if that's the case, we know that we can nail down the conversations that we need to have in that circle.
And I would just like to piggyback on that, because you're right. Being a realtor, I think we might make it look easy, but at the end of the day, it does take art. It does take the way we communicate with our colleagues. Just a great example is we met a new client yesterday for the first time up in Oceanside, and it was a referral from a past client that's referred us quite a few clients. Had never met them, only over the phone. And so we connected really well. Based on that, we had, they had seen a couple properties. And so right away, after talking to them, the first property they had seen felt like that was the right property after the conversation, after about 30 minutes. And so right away, this morning, I called the listing agents. And I started just negotiating, just talking with her. This is a situation. I have a signed listing. This is where we're at. They're approved. And by the time you know it, the agent is like, well, send me an offer, even if you're contingent. And so that's what I'm talking about when it comes down to connecting with the agent, start negotiating on behalf of the buyer, and making the agent feel comfortable knowing that we're serious. And I think that's a big part of how our offers are accepted. Is is really hustling, but really connecting with the listing agents and really having the loan in order with the lender. And I think that has been our success through the years.
So I often kind of get asked, you know, like I'm gonna wait because the rates are too high, or just even affordability of the payment. There are different programs that we can help you with. And one of them is called a 2-1 buy down. You have a 1-0 buy down and a 3-1 buy down. I'm sorry, 3-2 buy down. What this does is there's two ways to manage this type of loan program. They are all 30-year fixed rates, but let's say, for example, we do a 1-0 buy down. If the rate today is 6.5%, the rate for the first year would be 5.5%, which could save you hundreds of dollars, you know, and thousands over that first year. So for the first year it would be 5%. And this is not an adjustable loan. What is done is you as the client or the seller repays the interest for that first year. That will allow you to bridge that payment, maybe to get comfortable with a higher payment than what you're paying ground, or even just to allow you to recover the savings that you just applied towards your down payment. But a 1-0 buy down or a 2-1 buy down, now a 2-1 buy down would be, if today's rate is 6.5%, the first year the rate would be 4.5%. The second year it would be 5.5%, and the third year and final year would be 6.5% for the rest of the life of the loan. Now that is done with a seller credit. And in all of last year, I have to state that the Peraza team were one of the only teams to be able to negotiate enough seller credit to facilitate these type of loans to help our buyers get into a property where they felt comfortable with the payment, and knowing that rates will come down. And when they come down, you will be able to refinance into that lower rate, but at least you're not buying at a higher price, therefore paying higher taxes, and even going into a bidding war once rates come down and prices continue to rise. So if you have any interest in purchasing within the next 12 months, just make an appointment. We can do a one-on-one Zoom, we can meet in person, or we can do everything online. Like, we are very flexible in how we handle our clients so that you can know what is right for you, because every scenario is different. Your loan application and your needs are completely different than your family, your uncle, your aunts, your cousins, your friends, your coworkers. Everyone is going to tell you something, some type of advice. Don't buy now, the rates are too high, the market's going to crash, or that payment or this, like that. Everybody has something to say, but it's really about your scenario and what feels right for you and what are your needs. And we are here to help you. We're here to walk you through the process, whether it's now or in the future, but to have a plan to become a homeowner or to continue to invest in real estate. That is what we do.
Well, thank you, Selena. Thanks for your time. Thanks for jumping on here. I know it was exactly an hour from the time we started, which was right on time. If you guys have any questions, you got 5 seconds. And if you don't, I will send you guys off.
Thank you, everyone. Thank you. We appreciate you joining us today.
Bye. Talk to you
Till
soon.
the next one.